What's going on, guys? Back with another Confluence video. Today we're going to be going over how you can use equilibrium, premium, and discount and stuff like that, all sorts of stuff to use in your trades and how you can use them to win your trades. So the definition is put up right here. In trading, equilibrium is the point where market supply and demand are balanced, resulting in a stable price, often represented by a horizontal ranging price action. It signifies a temporary halt in a strong upwards or downwards trend, representing fair value where buyers and sellers agree on price. Price often returns to the discounted or the premium zones before to enter trades in the direction of the overall trend. So equilibrium is basically a retracement into the 50% or less or higher of the range of the manipulation leg. So as you can see right here, we have this fib pulled up right here. So if there is a candle pattern going up like this, coming up like this, and then it starts to come back down. It's gonna start to come back down like this. And then we're slowly coming back down, and when we finally hit equilibrium, this is just a balance to rebalance the price, and so we can then move higher in our overall trend continuation. So I'm going to go into some on-chart examples and how you can use them in your trades to win your trades, and just examples like that. So here we go into our first on-chart example. Okay guys, so here for our first on-chart example, we can see that after manipulating back up here, we get this first retracement into equilibrium from this manipulation leg. We see price comes back into the 0.75, so just above the 0.5 area right here. And then what do? We instantly displace lower, starting to move back down in the original direction of our trend, right? So because we were in an uptrend, now we come back into equilibrium and we move lower. Amazing. Then right after that, the same exact thing happens. We take our fib, draw it from this lowest point we had right here, and then what does price do? It instantly comes back up into equilibrium, rebalancing the range, getting price into a discounted price, so price can then move lower and eventually fill the orders that were made all the way down here. This is a beautiful example. Same right here. We have price come back up into this premium of the range, so price is now more premium, so now we can look for sells because it's a little bit too expensive, right? Then the same exact thing happens. We displace lower because of this premium move. We come down, then we instantly just starting to displace higher back into premium. And what do right after? We can see we get an immediate 5-minute IFVG right here. Right here, we can see we get an immediate 5-minute IFVG. Beautiful displacement through here. Take our entry short position right here, and we get stop loss at the high, and we can TP right here. Absolutely banger trade. If you took this, wow. This is just so textbook, it's not even funny. Like, just look at these. There's two retraces right here. Come back up, sharp move. As soon as the 11 a.m. hits, we get a beautiful IFVG right here. Instantly displacing, get our TP, and we just bang TP in literally less than maybe 1 hour or something like that. That is just absolutely textbook. If you this is what you need to. These concepts are so simple yet so effective to use when you're taking your trades. Now I'm going to get into the second on-chart example of this. Okay guys, this is literally the day after these on-chart examples happen. I'm trying to show you guys because this stuff is very repeatable and we can fuse it in addition to other confluences to win our trades. So what do we have here? So what does price do? We instantly manipulate these lows that we made yesterday from this equilibrium right here, right? We instantly manipulate these lows, right? Then we come up, take out these lows. Then what do? We fill, look, there's an hourly fair value gap right here. Beautiful hourly fair value gap that we fill. And what do? We wick equilibrium. And especially, guys, this is especially very important if you start to see this in their patterns. Look how big this wick is. This wick is about 150 points. So if we see a wick that big, we can assume that price is most definitely going to continue in that trend, right? So what do? We can drop down to the 15-minute. We can look right here. What do we have? We have the hourly gap that I showed you earlier. We come up, tap equilibrium, then we move higher, but we make an SMT. So ES took this high. So if you were paying attention to the correlated pair, like my old video, I just explained this in my last video about SMTs. If you were paying attention, you would know that this is a SMT right here. ES took the high while NQ didn't, and then we can end our trade there, right? Exactly. So now, after showing you this, I'm going to show you the last on-chart example, and this one is very important, so make sure you're paying attention. Okay, guys, this is going to be our last on-chart example, and this is an amazing example. And this is only because of how there was a... Look, right as New York session opens, what do? At 9:30 a.m., we immediately manipulate down to these lows, making a bullish SMT, right? Bullish SMT right here. Then there's an imbalance in the range. So what do we do now? We form a 15-minute fair value gap right here. Beautiful fair value gap formation. What do? We can use the fair value gaps in pair with equilibrium. So what do? We instantly take the high of this range and take the fib, put it at the low here. What do? 50% of the range, right, of this manipulation leg. So we come up, come back down, and then we balance the range through the discount of price, fill the fair value gap, and what do? We skyrocket, taking out old draws on liquidity all the way up here. Guys, this is just so textbook. If you took this trade, look here. We have a 5-minute right here. Yes. So what do we have? It's not a 5 minutes. What do? We instantly displace through this. We have a 3-minute IFVG right here. Take our entry long position right here. Take our entry, targeting whatever we want to target. I told you guys, even this got taken. Look, 340 points. We can catch 350 points just using this simple, easy freaking strategy, bro. It's so stupid simple that it's just not even funny. We take out these highs up here. So we take out these highs after filling equilibrium off of this range. We take these out, and after inversing this gap, we move higher, and yeah, that's basically it. Yes, look, right here, come up, take this out, IFVG again. We can take this, there's 2 entries we can take. We can take the first entry off this IFVG, and we can take the second entry off of this IFVG. There's a small inversion right here. Can take this entry, catching 300 points, but if you want to be a little bit more precise, you can take this long position right here, stop loss at the swing low, TP all the way up here like we discussed before. It's honestly so textbook, it's really easy. You guys can learn it. You see our TP eventually gets hit up here. So, guys, this is a confluence you need to add to your bag. I'm talking basketball terms here. You need to add this to your bag so it becomes a regular part of your trading. So, rebalancing the price range so then we can continue in the overall trend we were in before. Because usually when we do a retracement, we want to see a bigger retracement, because if the retracement is only to the 80%, say the 80% is like up here, it's not discounted enough. We want to wait till price is more discounted so then we can get a cheaper price so we can get a better trade. If you guys, this is so stupid simple that it should be added to your trade every single time you take a dang trade. It's not even funny how easy this is. If you can understand these stupid simple concepts, you will make it very far in trading. That is what I have to say on equilibrium. Thank you guys so much for watching. Guys, please do remember I am affiliated with Alpha Futures, and you can now use my code PROFITS at checkout with Alpha Futures. That'll save you 25% off of their 0 accounts right now, which is absolutely wild. That is just mind-blowing to me. So you can take those. You can take those that 25% off on their zero accounts, and I'm also affiliated with Top One Futures. You can now save yourself 60% off of their accounts. You can get your accounts for about $50. $50 for a 50K evaluation. Absolutely insane, and their rules are amazing. So please check them out as well. That's all I have to say for Equilibrium and that stuff like that. So thank you guys so much for watching, and I will see you in the next one.